Hi everyone, welcome to another Weekly Forex Forecast for the week ending December 11th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the Australian dollar versus the US dollar, as well as the pound versus the New Zealand dollar. And we're going to wrap things up with gold or XAUUSD, which could be on the verge of breaking out. We've also seen big breakouts from the euro, the pound, and the Australian dollar, so we'll get to all of that and more in today's video, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. First up, we have the EURUSD, and as I've mentioned recently on the blog, the pair has had a nice breakout from this 4-month consolidation. So if you'll remember, we had this rally from these March lows, and then we had this consolidation through this area. I was buying the pair through here, rode it all the way up to just below 119.70, but then the pair went through about 4 months of consolidation. However, during this entire time between 116.15 and that 120 area, I was looking for a break higher given the fact that this uptrend was still intact and we had this nice sideways consolidation. So last week you can see where the pair did break out with conviction above that 120 area. Another level I've been talking about a lot recently is 121.50. So this is a key level going back several years, and you can see where last week did find some selling pressure around that area. So from here, we could see a pullback all the way to 120. However, don't be surprised if we do get a partial pullback followed by some constant pressure on 121.50. There's even a chance that we could start out the week with pressure on 121.50, which would be indicative of an eventual break there. But it would be healthy for the pair to pull back or at least consolidate a little bit so that the 10 and 20 EMAs can catch up a little bit, because right now the pair is overextended. So I remain long here from a couple of weeks ago. I was buying at the end of the week, which I told members about, and I'm going to hold this all the way to 125. That's been my target here for the last few months, ever since the pair broke out from this monthly symmetrical triangle. So this is something I've been talking about for months, where we have this triangle pattern that dates back all the way to 2000. So as long as the pair is above 114.50, this is something I've been talking about a lot recently. As long as we're above this area, I've liked the pair higher. And sure enough, you can see where we are breaking out of that consolidation. So 125 is this swing high back here, and that's going to be my target going into 2021. Now, I do think the pair could move even higher, in fact, much higher, but that's going to be my target because I can always get back in if I do see constructive price action once we reach that 125 area. But for now, looking at the daily time frame, we could see a pullback here as long as the pair is below 121.50, with key support coming in right around that 120 area. If we do get above 121.50 on a daily closing basis, the next key resistance comes in around 123.30. The British pound has a 20-year pattern of its own. However, it is lagging the EURUSD a little bit. While the euro has broken out from a 20-year pattern for several months now, the pound is just now working on that resistance area. So this falling wedge is something I've mentioned a few times recently, and you can see here on the monthly time frame how the pound is right now testing that area just below 134. So not only is that the top of this falling wedge, but it's also a key horizontal level that served as resistance for some time now. So ideally, I want to see the pound break out from this 134 area on the monthly time frame. So I want to see December close above this area to signal a breakout from this 20-year falling wedge pattern. So looking at the daily time frame, we still have the same key levels that I've had on my chart now for weeks, where we have the May trend line support down here, which is a little bit of a non-issue at this point because we are holding above the top of that falling wedge that we just looked at. So as long as this area just above 133 is intact, I like the pair higher. However, one thing I've said recently is that 134.80 is going to be resistance. If I zoom out here on the daily time frame, you can see where 134.80 has been resistance now for some time. And you can see where last week, both Thursday and Friday, found sellers right around that area. So we do need to see a daily close above 134.80 to expose that next area around 137. So just like the EURUSD, if we do get a pullback, look for buyers to come out and defend that area just above 133. And keep in mind too, just looking at the daily time frame, that we could see buyers come out around some of these recent highs too. So if I draw a level here, you can see where right around 133.90 or so, these highs back here, this could be key support going forward. So we may not get a full retest of 133.20. We may just get a pullback to 133.90 or so. So keep an eye on both of these areas this week. If we do see buying pressure come out around those areas, that could be the trigger for a move above 134.80 followed by a close above it. Again, 137 is going to be key resistance if we do get a daily close above 134.80. But all in all, just looking at the weekly time frame here, I do think that if we get a confirmed break this month above this falling wedge resistance, I do think that there's a good chance the pound could move up to 145 in 2021, which, as you can see, was the double top from back here in 2018. Furthermore, this is something I mentioned to members recently, where it looks like the pair is forming a bit of a bottoming pattern. Now, it's not perfect, but you can see where we have a couple of left shoulders over here. We then have the head and a potential right shoulder. So this to me looks like a bottoming pattern for the pound. Combine this with the falling wedge, which does hint at a move higher, and we could get a much higher GBPUSD going into 2021. But again, it is going to be key to see the pair break out from this area on the higher time frames. We need to see a close above that 134 area to confirm the break and send the pound higher. So the Australian dollar finally broke out last week. It has lagged some of its counterparts quite a bit, but last week we did get a break of that 74 area. So you can see where, similar to the EURUSD, we had an uptrend followed by a lot of sideways consolidation here above that 70 handle. All right, so this area through here has been support for the pair over the last few months, and 74 has been resistance. Now last week you can see where we did get a breakout on these two candles. And what I want to talk about today, though, is what happened on Friday, because we did get consolidation in the form of an inside bar or inside candle. So you can see here where Friday formed this candle that fits inside of Thursday's range. And this to me signals consolidation, which could mean a move higher for the Australian dollar this week. I like to play inside candles that form after a key breakout and with momentum. As you can see, this breakout is clearly with the momentum that's been in place since March, and we also have a key breakout above 74. So the trigger for this candlestick pattern would be a move above 74.50. That's going to be just above this high on Thursday. So we need to see the Australian dollar hold above these lows around 74 and move higher in the coming week, take out 74.50, which could trigger a move higher for the Australian dollar. Now, the next key resistance, looking at the weekly time frame, doesn't really come in until 77.40. So if I zoom out, you can see where all of this choppy price action back here, there weren't really many key levels to speak of except for 77.40. Look how it served as resistance. So 77.40 is going to be the next critical level I'm going to keep an eye on, followed by 81, which was the double top in 2017. So the Australian dollar is another currency pair that could move much higher in 2021 as long as the price action continues to stay constructive like it has been over the last few months. But do keep an eye on the inside bar that formed on Friday, because a break above 74.50 this week could send the pair even higher. The pound broke down against the New Zealand dollar recently. We saw a couple of weeks ago where the pair broke this channel support right around 190. So this is something that I talked about all the way back here. We were playing this pair out of this ascending channel, and our target here was 190. So since that time, you can see where we've had some lower highs, which signaled an imminent breakdown. So this is a case where I was actually selling this pair through this area based on this bearish pin bar right here. And the reason I was doing that is, again, we had this move lower, retest to the 190 area. We had a move higher. This was a lower high relative to this one. And then we got another lower high. So all of this right here was indicative of an imminent breakdown. So I told members that I was shorting through this area, and I added to that position once we got this breakdown on this weekly candle. So I remained short here, and you can see where last week actually retested the bottom of this channel as new resistance. All right, so we had the breakdown here, and then we had the retest as new resistance. So as long as the pair stays below that area, right around 190.50 or so on a weekly closing basis, I do like the pair lower, down toward 182.80. Notice how 182.80 served as support back here. So that's going to be the logical target as long as we stay below this area of resistance on a weekly closing basis. So don't be surprised if we do get more volatility from the GBPNZD. This is a currency cross that loves to retrace. All right, we can see that even when we get a trend like this, look at how many times the pair retraces the previous move. All right, so don't be surprised if we get a move lower, followed by a move higher, followed by a move lower. It's going to be choppy. So if you are going to get in here, you do want to keep some padding between your entry price and your stop loss. And just expect some volatility on the way down to 182.80 if it does happen over the next few weeks. If you saw last week's forecast, you know about this descending channel on gold. So what I said back then is that there were two possible scenarios where we had a lower level connecting with this swing low and also this one. The other scenario would have been a lower level that connects with this wick low through here. All right, so that level would have come in closer to this 1700 area. However, as you can see, gold did find support right around 1750, and that's the location of that first channel that I talked about. So as of right now, we do have a bounce from the 1750 area. We also have a daily and weekly close back above 1790. Remember how I've been talking about 1790 as a critical level that dates back to 2011 and 2012. You can see back here how this 1790 area was resistance, which is why I like the area as support going forward. You can see here on the weekly time frame how gold did hold above that 1790 area on the weekly chart. However, as you can see, buyers still have more work to do because 1850 stands in their way. So looking at the daily time frame, 1850 is going to be the level that gold buyers have to break on a daily closing basis in order for the pair to see higher prices. So we need a daily close above 1850 to expose the top of this channel somewhere around 1900. So ideally, I'd like to see a breakout between this area around 1900 and 1930 to expose higher levels. That would signal a breakout from this consolidation. And make no mistake about it, gold is still very much in an uptrend. We've had an uptrend here for years, and this consolidation, in my opinion, still looks constructive. So I do think that there's a good chance that this low back here was the bottom for gold, and that we could see a bit of a retracement followed by a push above 1850, followed by a move up toward 1900. And again, a breakout there could take gold much higher, including up to 2015 and 2075. That's going to be my base case as long as the pair stays above 1790 on a weekly closing basis. And if you saw Friday's post about silver, you know that I like both gold and silver much higher into 2021. So this is what I'm watching for now. I do think that gold could consolidate a little bit more. Buyers still have some work to do, but this could be the start of a much bigger rally for gold into 2021. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.